today's report, the 7th of August 2024. News events. I think everybody knows and can sense already what I want to talk about today. But bloodbath at the cryptos. What is next? Right? So on-chain analysis from last month indicates that investors assume long positions when Bitcoin surpassed 70,000. Currently, as I draft this report, it hovers around 54,000, a drop of 16K. Now, on Monday, the US spot Bitcoin ETF experienced substantial net outflows, nearly 168 million in a single day. The data from Parsec Finance highlights a significant uptick in on-chain liquidations across Ethereum DeFi protocol, setting a new yearly record with over 350 million in positions liquidated on Monday as well. Now, this is bad, right? So this surge in volatility continues to be driven by excessive leverage. And this is the constant issue right now. The reason why you're seeing such great moves is always leverage. That's the keyword. People use leverage, and when you use leverage, it's a double-edged sword. So what happened was several $100 million in long positions were liquidated, precipitating a rapid decline in Bitcoin's value. Now, triggering these liquidations were both cryptocurrency specific and broader macroeconomic factors. So what are they? Let's visit them right now. Now, from the crypto side, right, fears escalated over potential large-scale sell-offs by Bitcoin whales, especially following reports that the bankrupt trading firm Genesis and its creditors might liquidate over 1 billion of Bitcoin for creditor payments, and the US government moving 2 billion worth of Bitcoin presumably to sell. Okay. These outflows underscore Bitcoin's current perception among investors, not as a safe haven, but rather as a volatile risk asset prone to sell off amidst recession fears. This is something very crucial. Want everybody to take note. Yeah, based on what we are seeing so far, definitely not this category, not a safe haven asset, as what you call touted by all those Bitcoin people, cryptocurrency people. So we have to go back and look at the feeling, the general reaction of the price to tell us which class does this asset belongs to. Now, it might be in the future, be like Gold 2.0, but not right now. Definitely not right now. Okay. So on the macroeconomic front, the unwinding of the yen carry trade, where investors have historically borrowed low interest yen to purchase high yield assets globally, including cryptocurrencies, place additional pressure on the market. With the Bank of Japan's unexpected increase of its interest rate to 0.25%, investors panic as the move could potentially diminish profits, leading them to liquidate assets purchased with borrowed yen. Now, the unwinding of the yen carry trade might suppress market activity until it concludes. Should market conditions deteriorate further, the Federal Reserve is likely to intervene, as is customary to stabilize the market. Now, such interventions typically involve quantitative easing measures, which historically have proven beneficial for cryptocurrencies. So right now, they're talking about 50 basis points. They even called by a professor in Wharton, calling for a 75 basis point rate cut as well. So this kind of things could potentially happen if the situation worsens. So we need to look at the development so far, then we'll see from there. So whatever happened, we will know in the next couple of days, the situation, how it is. Currently, Bitcoin is undergoing its most significant correction in this cycle, with a 30% retracement over 2 weeks and 33.7% overall from the high. Now, the CBOE volatility index aka the VIX, or the fear factor, spiked to a peak of 65.73 on Monday, reaching levels last seen during the COVID-19 pandemic, and has since decreased to 34.5. Further reduction in the VIX, possibly to the 20s, combined with market stabilization, could present buying opportunities. Right now, you look into it, once it start dropping, people are not that worried anymore, then we can start looking into this buying. It's worth noting that while August is generally quiet, market activity tends to revive in October. We may see the market remain range bound until then. Okay, but nevertheless, in situations like this, go back to price action, refer to the structures, and then depending on your style, either you're doing investing or you're doing trading, use those methods and start building your portfolio from there. Okay, so with that, that's the report for today.